Evening, everybody. Jim here from Southern Impression Homes. Thanks for joining us tonight. We're gonna get started a few minutes after the hour. Just give people a few minutes to finish up work, finish up dinner with their family, and then we got a great night planned. We're gonna do a little review of what's been happening in the build-to-rent world with us, with the market in general, Florida, and talked about one of the most exciting things we're working in right now, which is our in-house financing program, where Chad Emerson, who's done tens of millions of dollars of loans with us and probably with some of you, is going to explain what's happening in the market right now, what's going on with these crazy rates, and how are we define that. So we're going to, again, wait about 2 to 3 minutes to get started. So I see already people are joining on. We just want to give people those extra few minutes to get on, but we've got a great night planned. We will not keep you too long, but I think we've got some great information to shed light on a lot of the questions that have been coming to us at SI, and I think we'll be able to answer them. And also, you're going to find a lot of silver linings that Chad and I were just talking about yesterday, especially with the new lending programs. So we'll just let people join for about another 2 minutes, and then we're going to get started. So again, if you're just signing on, we're going to wait about 2 to 3 more minutes, give people that last bit of dinner, finish up work so that we can get started. Got a great night planned, reviewing kind of what's happening in the build-to-rent industry, what's happening in Florida, and one of our most integral parts of our strategy and team right now, Chad Emerson, who's on with us, is going to be talking about how we're getting this incredible in-house financing, what's it look like, and what's the outlook for rates in the future and also inventory levels. So it's going to be a great conversation tonight. Appreciate you joining us. All right, about 1 more minute, guys. We'll get started. I appreciate your patience. I always like to give those few extra minutes for people to log in, finish time at home. Yeah, won't keep you on long tonight. Have a great conversation planned, but we'll get you done about 35 after the hour. All right. Well, I appreciate everyone joining me. My name is Jim Shields. I'm a partner with Southern Impression Homes. It's been a very interesting ride in real estate for me the last 25 years, starting out in rehabs. And then about 10 years ago, my partner, Chris Funk, and his father approached me and said, why don't we start building our own rental properties instead of fixing up old ones? And that was kind of the inception of Southern Impression Homes. Now, for all of you out there, some of you familiar faces, we do have a new best-selling book that we put out. It's kind of about my real estate journey and the adaptation into build to rent. It's a best-selling book. We're going to share it with you tonight for free. At the end, we'll show you how to do that. You're just going to send Kate an email. She'll send you a free copy by mail. It's really about the fundamentals of build to rent, the pitfalls I found in my 25 years of building my own rental portfolio, and how we're helping our investors do it in a better, more effective way. So this is going to be something we'll share some principles on tonight. A lot of you know what our sweet spots are. And our sweet spots in our build to rent program are the single family, the duplexes, and the quads. And a lot of people say, well, is it worth owning rental real estate now? And we still believe it is. Here's an interesting fact we came up with in the beginning of this year. If you invested $250,000 into the S&P 500 5 years ago, you would have earned about 10.5% on your money. Good return. If you had invested in a REIT or a successful real estate syndication or fund, you probably would average about 13.5%, which is another good return. When you look at owning your own property, if you had invested $250,000 into our build to rent program in Jacksonville, Florida 5 years ago, you would have averaged over 69% on your money. And those are accurate numbers. And that shows the power of owning real estate. The S&P is great. I invest in it. So are funds and syndications. But owning your own real estate is one of the most proven ways that we still believe in. And why do we believe in it? I mean, this is the Federal Reserve chart right here. And as you look at this, real estate always has its little blips. There'll be small periods where it goes down, but on the long term, for the long time buy and hold person in the right markets, it has always gone up. And that's something that we believe in, and we follow the principle of. So 1 second, guys. Oh, got a little jam up here. Sorry, guys. So, is there still movement in our market? We believe there is. Tricon was purchased in the beginning of this year by Blackstone, the largest hedge fund in the world, for $3.5 billion. And what is Tricon made up of? I actually had a call with one of the heads of Tricon the other day that we're starting to work with. They own properties just like the ones that we build. So it shows that this market is not only still vibrant, but some of the biggest in the world are continuing to double down into it and go deeper into it, which is a great sign for us smaller people to follow the same fundamentals. Now, in order to get started with our portfolios, some of you already invested. Again, some of you are just starting. You're going to need about $80,000 minimum investment to start building your own portfolio with us. You're also going to notice, for some of you, this might be a shock, but we've grown. We are nearing now almost $1 billion under asset management, which we're very proud of, and we continue to grow. Sorry, little slide there. Right now, what does that mean with this 900 million under asset management? Oh, sorry, guys, we got some slide issues here. So right now we have 1,000 investors, nearly 1,000 investors, and that's growing weekly. We have also produced over almost 10,000 units now. So those units are definitely growing, and that houses nearly 11,000 residents. So we're very proud of that number that's coming up. 120 people on the team now. I don't know if some of you know that, but we have 120 people on the team making this all happen. And we currently have over 5,000 lots in Florida that we plan to build out. And we are in the position now to build it out. I know that some of you know that we had a pretty exciting development about 1.5 years ago. Part of our company was acquired by Sumitomo Forestry. Sumitomo Forestry is a 331-year-old Japanese company that builds 17,000 homes annually worldwide. This has given us an incredible experience of having stronger banking relationships, less debt, more solvency for all of the people out there. I know that a big concern for people was, is your builder healthy? Do they have the money to continue to build and finish your projects? We've been put in a very good situation, and this all trickles down to our clients. We're able to get better deals in pricing and quality with subcontracting, with materials, with connections, with being able to do what we'll discuss today, like with Chad, with being able to pre-buy mortgages. And they've allowed us to keep that same client focus and spirit that some of you started with us 10 years ago of building portfolios for individual investors for long-term passive income and overall wealth. And we're very excited about that. Now, as you know, there are 5 predictable passive income success indicators. If you've ever watched mine and Chris's videos, we talk about all these. Where do we go to invest? Well, we always go to invest in markets where we see these 5 factors. Economic growth, there's got to be jobs going in. Population growth, we want that growing. Affordability, this is absolutely key. An affordability index is something you always want to watch. What is the average family income able to afford for the average price in an area? And the markets we focus in, the affordability index in Florida is very, very healthy still. Desirability, you want people to want to live there. What's the draw to live there? And of course, as a builder, a healthy supply and demand. We want to go to areas where the amount of inventory is well below needed levels so we can fulfill that need. Florida has all of these, and not every area in Florida, and we'll talk about those, but Florida has one of the best affordability still. I get a call every day. People say, I think the ride is over on real estate. It's gone up too high. And I always say, in which markets? So look at affordability here. We've, in the recent year, had a lot of investors come to us from Salt Lake City, Utah. Beautiful area, know a lot of people there. But look at these numbers. Salt Lake right now, the median value of a home is reaching $600,000, where Cape Coral, probably our most expensive market, is about $250,000 less. But that's with the same median household income and the rents being almost relatively the same. So I always ask the question, which market do you still think has room for growth? Another market where we've had a lot of investors coming out of Boise, Idaho, another beautiful area. I RV'd through it with my family years ago. Well, look at this. Again, about $250,000 difference between Boise, Idaho and Jacksonville, Florida, our hub market, with very similar household income and same average rents within a few $100s of each other. This is something we really look for to say, is it still affordable? Is there more room for growth? And that's why we focus on markets like this in Florida. Another thing that's to consider, we all hear about these inventory shortages, but between January 2012 and June of 2021, we formed in our country over 12 million new households. However, there was only 7 million new homes built, which this is a major discrepancy in needed housing. And where is that housing needed? Well, a lot of that is going to be in areas that Florida is underserving. See, a lot of you will talk about markets like Miami. You'll talk about markets like Tampa. You'll talk about markets like Orlando. Beautiful areas. I have family and friends there, but that's not where we focus on our builds. We're in the second tier markets. Why are we there? Because those are the places that still have the affordability. They still have great population growth, economic growth. They're undersupplied in housing, and there's still desirable draws to live in all of these areas. Another interesting thing that we fill the gap on, since 2008, there has been really a deficit, an absolute ignoring of the needed smaller properties under 1,400 square feet. In fact, all new builds of this type of property, it's been less than 10% of all new builds. So this is one of the major things that we bring to our markets is these smaller, more workforce housing that are in needs through our single family homes, our duplexes, and our quads. Now, as you know, we provide all of these for you. We want to find the deals. Which of these areas have the five fundamentals that we look for? How do we get the land? How do we get it developed? How do we build the right type of property for you? Then you have to finance the deal and manage the deal. And we try to step in on all three of those. Now, as I said, one of the most important things that we do right now is our partnership with our lenders and bankers. And Chad, who's on with us today, has been an integral part of our growth over the last 2 years. And Chad tonight is going to talk to you about what a lot of you have written in emails and said, hey, this can't be true. This can't be true. You're not getting rates at 4.75. And I know Chad will absolutely remove that doubt tonight with what we do and how we do it. But I thought it was important to bring him in to discuss this. Chad, could you introduce yourself?
Hello, everybody. Chad Emerson with CMG Financial, also CMG Home Loans. We're kind of trying to find an identity for a new name, but we'll just go with CMG Home Loans for now.
Yeah. And Chad, tell us a little bit about your history of working with investors and this new product that you've been working with us on dozens and dozens and dozens and dozens of properties at this point, and kind of how it came about.
Well, yeah, excellent question. So my book of business is probably made up almost exclusively with investors. I've been doing this for over 26 years now. And I can do any type of loan here at CMG, but what my niche is and what I focus my attention on is doing loans for investors. Those who are just like yourselves out there building portfolios. Some of you first-time investors, some of you are seasoned investors. But when we saw the rates go up a little over a year and a half ago, obviously the main question that people say is, you know, if I'm an investor, if the rates are this high, how can I make this a worthwhile investment for myself, right? And also with a lot of builders I've had relationships with, they've all asked the same question that, you know, so how do we get investors in here to start, you know, purchasing our properties? And I said, well, with investing, it's a numbers game. If the numbers don't make sense, investors aren't going to buy, right? So we had to figure out a way to make this work. How do we make the numbers work so we can make this a worthwhile investment for the investors? How do we make this work for the builders too? Because builders want to build, and builders, if you're not, you know, if you don't have a client base out there, if they're waiting on the fence and waiting for those rates to come down, it could be a long wait, right? So anyways, we came up with what we call a builder forward commitment. And essentially the way that works is it's an agreement between the lender, in this case CMG, and our our relationship with Southern Impression Homes, the builder, and they actually assist in buying down the rate for the investor. Okay. Now, this is going to be different than a seller. It's not a seller concession. They're not giving you any sort of funds. They're not giving you any kind of price cuts. What they're doing is they're assisting in getting the rate down to a place where the numbers do work. And we think that 4.75, that does make the deal work. That does help you cash flow on your investment. So the real short explanation of how it works is CMG owns our own securities company. It's called Capital Markets Division. And what we do is we facilitate an agreement with Southern Impression Homes where they tell us how much they need to purchase so they can give to their investor base out there. So for example, you're trying to get into a 4.75 interest rate, for example, using option 2 there in the middle. We figure out exactly how much that's going to cost. The builder will pay for the majority of it, and then the investors will chip in a little bit too. Now, rest assured, you're definitely coming out ahead in this mathematical equation. It's a very expensive process for the builders, but they're willing to do that because obviously it's good for them because they can continue to build and sell inventory. And it's great for you guys too, because now you can actually cash flow in this crazy environment.
Chad, what do you see in more people? Because some people have a different appetite. Some people say, do you want to explain the 30-year fixed is pretty straightforward. We're buying down the rate and buying, blocks of money through your securities group to do that. And it's 30-year fixed. But the 10-6 arm, do you want to explain that? Because I know a lot of people are going with the 10-6 arm, exactly how that works in case there's any confusion.
Yeah, absolutely. So the 10-6 arm is probably one of the most popular programs right now for a number of reasons. Obviously, you can see between option 1 and 2, it's obviously going to be lower than the 30-year fixed option. With the 10-6 arm, we can actually go deeper. We can go lower on those interest rates. Now, the people always ask me, what does the 10 and what does the 6 mean? Okay, so first, I want to clear up any confusion. It is a conventional loan, first and foremost. So that means 2 main factors. It's going to be amortized over 30 years, just like a 30-year fixed mortgage. The other thing, too, is it's not going to have a prepayment penalty. And I'll explain in a minute why that's really important. So, but the 10 means it'll be fixed for the first 10 years. As far as ARMs go, there's a lot of questions out there. People hear the term ARM and they think it's kind of like a 4-letter word. It really isn't. It all depends on how long is that fixed period. I think a 10-6 ARM, it's the safest ARM out there right now because it is going to be fixed for 10 years. 10 years is a very long period of time. Some of you may not even own that home after 10 years, or some of my longer term buy and hold investors will still own it. But there's always that concern of what's going to happen after 10 years. So that's where the 6 comes in. It can then adjust once every 6 months. Okay. Now, we're also running a program internally through our company for those that want to get the lower interest rate, which I'll explain in a minute why I think it's more important. But if you want to take advantage of those lower interest rates and cash flow more than you could on the 30-year fixed option, for example, you can do it with relatively little risk to your part. So what I mean is we're running something called a rate rebound. And anybody that closes a loan with CMG right now automatically is going to will qualify for this rate rebound program. The way it works is from your closing date, you'll have 5 years to come back and do a refinance with us. If you do that, we're actually going to do the refinance. We're going to waive all lender fees in that refi. We're also going to give you $1,000 credit to put towards the third-party fee. The biggest third-party fee out there is going to be an appraisal. Okay. Now, a lot of people have used the term free refi. It's not really free because there are going to be title fees out there. We do need title companies to assist us, and title companies are still going to get their money regardless. But if you can come back to us within 4 to 5 years, it's still going to be the lowest cost refi option out there. Now, one thing I want to say is, some people still, even though that I think this is a very safe option, the 10-6 arm, some people are just, they're going to stick with the 30-year fix, and that's fine. I think that's also a good option. But keep in mind that in about 2.5 to 3 years, at least that's the general consensus, is rates should be at their cheapest point, at least in the past couple of years than where they've been, obviously. And if rates do drop, maybe that will be the good time to get into something more permanent, like a 30-year fixed mortgage. So it's always been a good philosophy. If you're going to get into a 30-year fixed mortgage, you want to do it when the cost is at its lowest point, not like today when it's at its highest point. But still, there are going to be some that want to do the 30-year option. So that's why we give that as a third option here as well.
Yeah, which is, I know for some of our more conservative people, they just say we can get 30 years, we're going to take 30 years, and that's what they want. And I understand. I think most of the times when I heard about ARMs, Chad, it was 2 to 3 years. And 2 to 3 years can be, a short-term visibility. I agree with you. 10, as you said, the average person owns a property 7 to 10 years. So that almost takes most people who might be selling some of their property or such, if they want to cash in an equity or 1031 exchange forward, that time. But most, I'm sure you saw that too, was most of the time when people think about ARMs, they're thinking about 2 to 3 years, which is more of a shorter term.
Absolutely. Yeah. I think that's just it's too volatile, So and I've never been a big proponent of ARMs till we came out with this 10-year ARM. We did have a 7, which I thought was pretty decent. But when we came out with the 10-year ARM, just for fun, I started looking at, what is the pricing on a 2-year ARM or a 3-year ARM or a 5-year ARM in comparison? And our company has actually made those shorter term rate options, they're priced worse than the 10-year ARM. So that's kind of their way of saying, hey, don't even mess with these other options. We're gonna try and deter you from even selling those. I mean, if this is going to be a better, if you're going to price the best price you can get is on a 10-year versus a 2-year, why wouldn't you sell the 10-year? But some people still need a little nudge to push them in the right direction. So,
absolutely. Well, and Chad, I know that in a setting like this, we can say, currently Southern Impression Homes, to buy, bulk chunks of mortgages with your company, we're spending on an average of 7 to 8 points to do that per client right now. So, we're paying a good amount to make this happen. And so I think some people might be saying, why would I then ever go with like option one? Why would I want to, pay discount points myself to 3.75 to get that lower rate? Why do you see people doing that?
good question. Cash flow. That's one word answer.
Yeah.
I've looked at a couple different options for people, and ultimately, the real incentive here, you're not going to see price cuts from the builder. You're also not going to see typically any sort of concessions to help pay for closing costs. I mean, the real concession here, folks, is the interest rate, and it does matter. People say 4.25 versus 5%, it's less than a percent. But if you run the numbers, I think you'll see, I mean, the lower the rate, the less you're going to be spending per month on that mortgage, and you're going to cash flow that much more. And then when you break that down over month after month for even 5 years, the savings does make a big difference. I know a lot of you will, you've got your numbers option where you want to say, well, does it make sense from a numbers perspective? And I think it does when you're looking at the option, I call it there's different terms for it, but a lot of people say, it's a break-even point, right? How soon can I break even? And the easiest way to do that is just compare the cost versus the benefit. So to go from, like, for example, at 5% where you're at 1.25 discount points, figure out what that cost is, and then go ahead and run the numbers at a 4.25 interest rate with 3.75 discount points. Okay. So figure out what that cost is first, and then divide that by your benefit, which is your monthly savings. And that's where you'll really see, does it make sense? Can I recoup my money within 5 years, which is kind of the gold standard? I've got my own standard. I like to see if I can break even at least within 36 months. Mine's a little bit more aggressive, but there's lots of different formulas out there. But that's why some people will go with the lowest option every time, just to increase cash flow.
Yeah. Yeah. And I've seen in different rates that I've bought down, I've looked at it to say, if I'm looking at owning this property shorter term, I'm more of a long-term buy and hold. But if it was a shorter term, then buying, discount points didn't make sense to me. But if I'm looking long term, like I'm actually looking at some properties I buy now to say, hopefully my sons will own these and my daughters. I I see this as you said, it's a break even, hopefully a little over 36 months. And when you think about that lock in for the long term, then now it just starts to become hand over fist profit when you get in at that lower rate for that. So I never encourage people to pay discount points if they're just totally against it and say, hey, I'm investing enough because we're buying it down enough. But some people would just ask me, why would you do it? And that the same reason as you. It starts to increase cash flow. There is a break even point, usually in a shorter amount of time. And if you're looking to own it long term, then it starts to become, just an acceleration of your cash flow and wealth as you hit that point.
Yeah, absolutely.
Chad, what is the qualification requirements like on these loans?
It's going to be conventional guidelines. I mean, we do these buy downs on conventional guidelines. So basically, you don't have to have an 800 credit score. Okay. Obviously, the higher your credit score, the potentially the better your qualifications of getting approved are. But you want to say at least have a 660 to 680 credit score. That's first and foremost. Okay. But then you also need to make sure that you're keeping your debt to income ratio under 50%. One thing that really helps with this is, there's a lot of banks out there that will say, they're going to count the full payment against you and say you still need to be under that 50% threshold. Some banks are even at 45. But those are what we call, that's like extra criteria that a bank will put on a qualifying option. Okay, that's not a Fannie Mae guideline. So that's the first thing that's kind of a misnomer. Now, what we do to help with your ratios is we actually will give you 75% of whatever the going rents are or the projected rents for that property. That's really important to keep in mind because these are new construction. Some of them are already complete and you have renters in. That's wonderful. But for those that are brand new construction, you're not going to have renters in there. Wouldn't it be awesome if you can actually use the projected rents and help to use that number to offset your liability? And that's something that we do allow here. So we're very investor friendly. We just don't have any kind of extra criteria. If Fannie Mae allows it and Freddie Mac allows it, so do we.
Excellent.
Yeah. And then the other thing too is, I mean, just, in addition to good FICO score, good DTI, you have to make sure you've got the down payment and the reserve. So, obviously you want to have your 25% down. Reserves is just make sure that you've got whatever the PITI is of the new property. You want to make sure you have that at least 6 months reserves in your account. And then if you're a more experienced investor where you have several properties, there's what we call an aggregate. But just keep in mind that it does not have to be cash reserves. If you have a 401k or if you have an IRA or even a cash option, insurance policy, I mean, these are all different options to use as far as reserves to cover that reserve requirement.
Perfect. Perfect. And we're going to get to the questions in 1 minute. One more thing I wanted to ask Chad, because this comes up really often with us, is appraisals. You've done now hundreds of properties for us. What are you seeing with appraisals? Are they difficult? Are you seeing, and how does your bank set up to send out the appraiser? What does that look like? And have you seen any appraisal issues with our properties?
Yeah, well, let me kind of go backwards with that. Any kind of appraisal options with Southern Impression, I really don't see that hardly at all. The reason for that is I just think that these are actually priced right, and I think there's probably room for growth on some of those appraisals. But typically, the way this process works is obviously you have to get an appraisal. There are certain rules that we have to play by as lenders. Is they don't want the lenders to have any discussions with the appraisers. So what happens is, let's say you're an investor, you just went under contract with Southern Impression Homes and you started the loan process with Chad. We do have to get an appraisal to make sure you're paying a fair price for that house. So what we'll do is we'll actually order the appraisal through a third party. Okay. And this is another question that comes up a lot. So I'm glad we're having this discussion now. A lot of people are used to just having that cost for the appraisal worked into the closing costs. But the fact that we can't do that because we're ordering through a third party, we're required to And since we're going through a third party, they want to have prepayment for that appraisal for obvious reasons. So we'll go ahead and put in the order. You will receive an email from the appraisal company, and they will require you to go in and prepay for that appraisal by following a link. It's a very simple process. And then at that point, we will get notification once the appraisal's been scheduled, or once it's been accepted rather by an appraiser, once it's been scheduled. And then usually within a week to 10 days, that report has shown up back in our portal. We can go in there, download it, and immediately you will get a copy of that appraisal when it comes in. You paid for it, so you're going to get it immediately. We make sure that's something that you do get a copy of.
Perfect. Perfect. Well, guys, before I get to the questions, again, this is a really important thing to understand. As Chad said, it's very important to us to have a build to rent program where we can actually get you cash flowing new construction in high growth markets. And we've really had to figure out ways to make that happen. Joining with Sumitomo was a big plus, not only with getting better supply options, better systems, but also being able to work on a larger scale with people like Chad and his institutional side. And that's why we're offering these incentives of buying down the mortgages, buying mortgages in bulk, offering 2 years of free property management. And then if you want to increase the cash flow, you don't have to. Again, you can see there's options where there's very little to no discount points that will be offered for the program you choose. Or if you want to pay discount points because you're looking long term, and we've had people cashing in at 4.25% interest rate on quads because of, again, that accelerated cash flow. But we try to give you options and choices. Chad's been a great team player and someone we're excited to have on board with us through his programs, and also just his overall insight of inventory levels, what's happening nationally. And we've really gotten to get a lot better alignment on where we feel the market's going because a lot of the intel that Chad has been able to provide us. So let's get to a few of these questions. I see Brett has a couple of questions. You're interested in quads, but the area seems to have a high vacancy, 12% given the wave of new builds in Jacksonville. Any perspective on that? Yeah, Brett. Anytime that we've stabilized quads, wherever we've been, scattered in Ocala or Jacksonville, the quad developments always take the longest to stabilize. That's the way that it is. Quads are a very interesting kind of unicorn. They're harder to get approved. Not many people will build them. They're the closest thing to commercial that you can get without getting a commercial loan. And you go to the commercial realm, and Chad could talk to you a little bit about that. Totally different world. You're not getting 30-year fixed. You're not getting these types of rates. It's kind of a disaster in the commercial world right now. So there comes the good with it. Now, the bad is any, again, development, our property management team can send you kind of the scattered lot reports on the many quads we built in scattered situations out in Ocala, or one like Western Way. Western Way is 5 years old. And if you want to see where it first started, the slower ramp up to get those filled, and now where it sits at a stabilized in the amount of growth, both value and rents, this is something we're very comfortable with. And we try to tell our investors, if you go into a quad, yes, you're going to get one loan for 4 units, which is great for your serviceability. We're also paying the most amount of points. And if you schedule a call with Chad, he can start to go over how much do we actually pay to get you that low of a rate on a quad that's nearly $1 million. This shows the most of what we have to give. It actually, as the units go up from single family duplex to quad, it's more cost on us. So there's more cost on us. But again, the trade back that we always tell people, just know when new quad developments open up, they always take a longer time to stabilize. With every single group that we've ever done, every single development we've ever done in quads, that's just been kind of the nature of the beast. We don't know if it's the marketing takes a little longer to get hold because they're not apartments, they're not single family or duplex. They kind of sit in their own realm. But what we do know is this: every one that we've ever done, once they do stabilize and catch on, again, it might take a few more months in that beginning time, they've had some of our best growth and some of our best, not only value, but rental growth. So that's something that you have to consider. If you're not liking that kind of risk, then I'd tell you to go look at a single family or duplex that's already pre-rented even possibly, and stick with those. Concerned about the requirements to use Suncoast Property Management. The reviews and word on the street is very poor. The fee of 75% of 1 month's rent between leases hurts the cash flow. It does not motivate the PM to resign a tenant at the end of their lease. Your thoughts? Are you flexible? So Suncoast, our sister company, if you want to not use them on a single family or a duplex, that's fine. On a quad development where we have an HOA, you will have to use them. Now, when I talk about reviews too, it's very interesting to see the problem with property management is when you're getting property management reviews, A lot of those reviews, as we found, can come from not only buyers or clients, and sometimes you will have people that are not happy, absolutely. But a lot of the times we have disgruntled tenants or even service technicians that we no longer would work with. And sometimes that would hurt. Another thing that would hurt was about 2 years ago, we fired about 250 landlords. Why did we do that? Because these landlords were in our houses that were not like our build to rent model. They were in tougher areas, in worse condition. And you get put in this middle ground spot where a landlord doesn't want to do the fixing for the tenant and the property manager is stuck in the middle. And that can be a very uncomfortable situation. And so with that said, we had to let all of those properties go, and that's been able to help. Now, property management is not a perfect science. Suncoast is not perfect. I don't know any property management company that's that's perfect. But what I do know, this is where we've staffed up the most over the last 6 months, and we've been putting in more systems and processes to help with that. The $75% fee is only if the tenant moves out. There is only a small fee if the tenant renews. Something interesting that a lot of you know that are on here, Chris and I started in foreclosure fix-ups. We used to fix up bulk foreclosures and rent them out. When we did this, and we had over 2,000 of these properties that we had done, you look at the tenancy rate, and it was for just over a year. Our new construction, the average tenancy rate is just over 3 years. So we're getting a longer tenancy going to the new construction model than we ever were with the old ones. So these things can all help. So again, Brett, if you're not interested in using Suncoast and that's an issue for you, I'd recommend that you don't have to use them. You could find a single family or a duplex where you don't have to use them. If you are in an HOA community, you will have to use them because we have to keep up the integrity and launch of that neighborhood. That's very important to us. And then after 2 years, and the first 2 years are free anyway, you can decide to leave. That's up to you. What does the number 6 represent on the 10-6 arm? I know that Chad already discussed that, so we'll move on from that. What is the difference between option 1 and 2? Same 10-6 arm, but 50 basis points difference in rate. So if you look at that, Martin, let me move this. I don't know if you guys can see around my screen. That's the difference in the discount points. So if you're going to choose option 2, the 4.75 interest rate, you need to pay 1.95 discount points. That's what you're going to pay to discount the rate down. We're putting in about 7 to 8 points. And I can tell you this, a good experiment for you guys, go to your local lender and ask about getting these rates. We've had clients come back and say, our lender said we might be able to do it and you have to pay 10 to 12 points. So we're trying to get everyone a discount here, but that's always a good exercise to do. But getting back to where you were asking the 50 basis points difference, it's in the discount points. That's where it comes from, Martin. Putting in just under 2 discount points, which is pretty normal for most loans I've ever done. Or if you want to put in more discount points, you get that bigger half a point. Some of you might say, hey, that's not worth it to me. But others, if you're looking long-term, again, like what Brett was just talking about with the quad, you do your math. That might start to really make sense for you, especially if you're looking over that 36-month mark to hold an even longer term. All right, good question, Martin. Will SI Homes be offering any income fund investments in the near future like we previously did? At this time, no. We did our income funds. We did really well with a lot of investors helping us fund up all of our land positions. You know, we're very proud of the land positions that we built in the beginning of the pandemic. Some of our fund investors were very helpful with that. And so thank you. But when Sumitomo acquired part of our company, we no longer do private funds. We no longer raise capital. And we're in a very unique spot of we feel very lucky about. A lot of builders are out looking for money. We're not looking for money. We're actually loaning money, as you can see now, which is a very different situation. But no funds. Thank you again for your past with us, but not at this time. Luis, why 25% and not 20%? This is just what we've come up with. Now, Chad, on the single family homes, can they do 20%?
Yeah, technically, with the incentives, though, we tried to keep it fair and equitable for both sides. That's why we've gone with 25%. But there is still the option to do 25. We just would need to figure out what that difference would be and see if that would alter the points, the discount points.
Okay, and Luis, so you know that would only be on the single family. For duplexes and quads, it is a 25% down requirement.
Correct. Yeah.
If the appraisal is below the property value, will SI reimburse the appraisal fees? What is Chad's contact info? We'll get you Chad's contact info and he can go over that. Again, our appraisal issues, Brett, have been so far and few between because we know our pricing. We're doing multiples in the area, so it's not a lot of guesswork. It's pretty granular statistics. We have, if someone does it, we've reimbursed for that. And what we've done is actually had a second appraisal go out with better comps, and we've gotten it done for the right value. But every deal is case by case. Again, this has been such a far and few between issue, and we get asked it all the time. But that's where we stand on it right now. David, Jim, can you talk about the construction of the properties? I know the quads are frame and wood siding. However, it seems the duplexes are also framed. Consider the cost of maintenance, insurance, termites in a coastal and tropical climate. Why would you not build with concrete block? The financing options are great, but they're only a part of the buying equation. Great question, David. So I am sitting right outside in my little home office that I built about 12 feet from my house. The ocean is about 25 feet that way. So I always dreamed of living on a barrier island. It's something I really wanted. And my home was built in 2004 by the developer of the neighborhood. And it is wood frame. So people think there is this absolute catastrophe between concrete block and wood frame. I personally live in a wood framed house right next to the ocean. Now, what is the difference between wood frame and concrete block when it comes to building codes today? Anything 2004 or newer, the rules change. They have to be built to a bigger, higher standard in order to be allowed to be built in Florida. And there's something called a wind mitigation. So when you're doing a wind mitigation test, whether it's block or it's wood frame, it has to be able to perform up to those levels. So if a home is built properly, whether it's block or wood frame, and I own both in my rental portfolio, it doesn't really make the difference to me as long as it's been built to today's standards. And I will take a wood framed house built correctly, 2004 or newer, over an old 1950 block home because a lot of different reasons. As you said, financing is just one of the things in the buying equation. But the older homes built like that, they're on lower lying ground. That's where all sorts of problems can start to happen. And there's a different construction integrity to other parts of the house. So with the standards that we do, and if you haven't come down for a tour yet, that's something that I encourage you to do. We build a mixture of block and wood. One of the things too, David, during the pandemic, it was the craziest time ever because for a time, concrete block was actually cheaper than wood. And then it kept going back and forth. So we tried to do what's best for not only the integrity of the property, but also the buying equation of cash flow. There were times that we thought we were going to build wood and we had to build block because it was cheaper, and then vice versa. So today we will consider both, and we build with both still in our different areas, but we look at what's needed for that climate and area. There's a big difference in climate really between Jacksonville and Southwest Florida. They're two very different areas, two different hurricane impact zones and risks. So we build differently in those different areas. But again, I would talk to, if you want to set up a separate call to go deeper into this, we have great webinars and talks about this wood versus block. In fact, you can look at some of our videos we've done on this. What does it really come down to? How is it made? Same thing goes with well and septic. Now, I did a lot of new construction homes. Old homes back in the day, old fixer-uppers. I couldn't stand well and septic homes because they were built in the 1940s. You try to add a second bath to the property and it only could handle one bath. It was just a disaster. But today, our top sales girl, she just built a new home in a beautiful part of Jacksonville. It's on well and septic. My partner, Chris, has a beautiful ranch out in Ocala built on well and septic. So you have to know the integrity of the build and what's being made at it. I wouldn't get too caught up in whether it's block or wood frame. Both can be a very strong integrity, and I have both in my portfolio. Any programs for Canadians? John, funny you should ask. We've actually just had about 25 Canadian investors down here 2 weeks ago. I have good friends in the Toronto area that brought down a group of their investors. We love our Canadian investors. And for the first time, we have actual financing options, international financing option that if you reach out to Caitlin, her number will be here at the end. We can get you contact on that, but we actually have financing programs for Canadians. A lot of you guys are coming down. It seems the numbers, especially the difference in Toronto pricing compared to Florida, is really strong strong right now in our favor with cash flow. And not to mention, John, not picking on you if you're from the Toronto area, but your landlord laws are a little screwy. We like our landlord laws in Florida a lot more. So great question, John, but yes, we do. Eric, are there any good refinance options for homes we already bought through SI Homes? There's always good refinance options, something that Chad might be able to talk to you about. Now, you're not going to have us paying the discount points, so that's a little something that you'd have to work out with Chad. But I can tell you, Chad is a heck of a great lender, whether it's this program he's designed with us through his institutional money. But for refinances, I would set a call with Chad and see what he has to offer. You might be pleasantly surprised. Aaron, hello. Thanks for the webinar. I'm interested in investing in Northeast Florida, specifically quads. However, insurance rates are high, which is concerning. Will this be an issue in the future? Okay, this is a great question, Aaron, that we get asked all the time. So people call me and say, Jim, you can't get insurance on properties in Florida. And I always giggle and I say, on which properties? Because again, what I alluded to before when I was answering that other question between block and wood, there is a huge difference. Again, let's use my property right here. House built in 2004. I'm on a little barrier island. Okay. It's only about 12 houses wide, from intercoastal to ocean. Now, my house sits right here, one off the ocean. If you go about 5 doors down, there's a little house built in the 1950s, little block home. Its insurance, even though it's a third of the size of my house, it's 7 times the rate. 7 times the rate for this. Why? Because it was built on lower lying ground with different structural integrity. And that's one of the things that insurance companies look at. I was on with our main insurance provider today. We've actually had drops in our rates this year compared to other people, because when you can perform well through big catastrophes like hurricanes, which we had an incredible track record with the eye of the storm going over both areas of Punta Gorda and Fort Myers where we were building and had almost no damage and no flooding. That's something to be proud of. And this is something insurance companies look at. So when you say insurance costs have gone up, they have, but you have to look at the individual properties. And on our performance, which our property counselors will go through with you, you see actual insurance rates that will be able to get for you. So these are all in the performa numbers. So you'll see, does it cash flow or not? And I can tell you right now on a quad, for example, Chad's doing these every day for us, along with Chad's rates and the insurance rates we're getting and our free incentives. You are cash flowing off the bat with a quad. The insurance is affordable. So whether you're buying with us, obviously I want you to do that, or coming to Florida, just know there is a big difference between being in a flood zone or not. There's also a big difference in buying a property, and those quads are not in a flood zone, and buying a property that's newer than 2004 or older than 2004. That's a big consideration for insurance companies because they're all about risk. Great question, Aaron. Brian Shire, does this financing work for people wanting to 1031 exchange in? Absolutely. We love our 1031 exchange buyers. What's nice right now, Brian, is we're on a continual build cycle. When Sumitomo stepped in and became partners with us, we don't have any delays on building. Sometimes banks used to make you, our building construction banks would make you, hey, you can only sell it pre-construction. You have to do all these things. So what that would do is we had to turn away all our 1031 exchange buyers because building times were 6, 8, 12 months. Now that we're on a continual building cycle, you can close within 30 days of Chad on one of our properties. And 1031 exchange guidelines give you 6 months. We've never missed a 1031. So if you're thinking about 1031, Brian, we'd love to help you. We've helped a lot of my former friends out in California, where I originally was investing, sell their properties out there that are losing money and buy multiple properties here that start cash flowing. So if we can help you, we'd love to. Alfredo, around how much does it cost to buy down the rate to 4.25? Great question, Alfredo. So that's going to vary on each of these. So when you say 3.75 discount points, that's on the amount of the loan. So obviously a single family home you're buying for $270,000, that's going to be based off of 75% of that amount, and it'll be times 0.0375. If you're buying a duplex for, let's say, 450,000, well, it's 75% times that same amount. And then a quad is going to be even more. So the points go up depending on the price of the home. So hopefully that gives you clarity on that. Good question. Can the 25% come from a self-directed IRA? The answer on that is no, correct, Chad?
That's correct. We don't do any, there's no non-recourse loans.
Yeah. So if you're looking for a non-recourse loan, we do have a non-recourse loan option, kind of a brother group of Chad that we also work with. So reach out to Caitlin on that, and I can put you in touch with our lender that specializes in that. Okay, can you give me some details between wood and block? This is a really common question. And again, what you guys will see is, and again, if we haven't been communicating enough, Chris and I every month try to sit down and do videos of all the questions that our 1,000 clients are bringing to us. And this wood versus block is a really common one. What I'm going to do, since it's actually coming up a lot, Caitlin, my organizer extraordinaire who keeps me straight, is going to send out a video today of block versus wood construction. And Chris and I break it down in a 15-minute video, the pros, the cons, and what we're seeing and what's worked for people. So we'll send you out a whole video that shows that. How do you set up a tour, David? Just call our office, set a call with one of our property counselors, come down. We love touring. Now, I'm going to tell you this is selfish because we have about a 95% buy rate once people come and see the team, see the projects live, meet the management. So we'd love you to visit. All you have to do is call our property counselors, and they'll be here to set up the tour, and we'd love to see you here. What is the total amount Southern Impression Homes paid or invested in order to get a 5% rate on 30-year fixed? Again, Saul, we don't really publicize this, but on a private call like this, right now we're paying Chad's institutional group about 7 to 8 points per loan. That's what we're kicking in. So obviously that's quite a commitment that we're doing. Right now we're taking lower margins on our profits in order to help you guys profit, but we make up for it in volume. Kind of the old Walmart approach. We don't make a lot off each property, but we do a great volume. What about owner-occupied quads? 25% is investments in primary home. So if you want to buy a quad and live in it, house hack, live in one unit and do the others, you can get in from anywhere for 5%. So if you have an interest in that, again, talk to one of your property counselors. Yes, you can occupy one of our quad units and rent the other ones. It's not 25% down, it's 5% down. Did SI Homes build single-family homes on privately owned lots specifically to rent? I own multiple lots. Oh yeah, Carlos, we do what's called a build on your own lot program. So if you're looking for these lots, I don't know where they're located, but if they're in Jacksonville, Greater Ocala area, Southwest Florida, Palm Coast, we actually help people who own their own lots, and we step in to do the fee build for them. So if you have multiple lots, please reach out to Caitlin after this, and I'll direct you to our build on your own lot specialist in our property counselor group. I got to go. The seminar was available later. Yes, thanks, Luis. Going to be great to see you here. We also send out the video of this presentation. Sure will, Brett. Thanks for all your questions. Do you offer commissions to realtors who bring buyers to your developments? If so, how much? Yeah, we have a sales partnership program, and you can also send out information on that to you, Aaron. If you're a licensed agent and you work with your own investors, we're always building our pipeline. We have 5,000 lots we're building out here in Florida, and we are going into Texas and Tennessee over the next year. Right now, we do a 2% commission for our sales partnership agreement, and that's with our internal sales counselors doing all of the paperwork, all the sales contracts, all the inspections, all the appraisals, everything lines up. You just sit back and collect a check, and that's for every property that they buy. I must have missed it. Which properties are do you have closest to Punta Gorda? Well, Stephanie, we'll get you a list of properties, but we have properties right in Punta Gorda. So we're in that greater Fort Myers area in about 7 different markets. So we can get you a list of available properties in Punta Gorda, Port Charlotte. All of those areas are available. Some of them even pre-rented. So we can get you those for sure. Woo! All right, guys, that was like speed round dating on real estate investing. Oh, one more from Aaron. Could you provide insights on the expected cash flow from purchasing a quad in Northeast Florida? Aaron, every one of our properties has a pre-prepared pro forma. You can look at those on our website or get a couple copies of them from our property counselors, and you can look at that, but it's very healthy and usually over $1,000 on our quads with some of our best returns. Our cash-on-cash returns, I believe, are over 10% on those quads. So we'll get those out to you. Guys, this was a great session. Again, Chad, thank you for being here. Thanks for your partnership. You know, it's been such a game changer for us, for our investors. Do you have any closing remarks that I might have missed on?
Yeah, actually, not really. It's just, first of all, thanks for having this webinar. And thanks for inviting me too. But I really want people to understand that, you know, I only lend in markets that I believe in. And, you know, I've had other offers from other places, And, I'm pretty picky and choosy of who I work with, but I will say that Southern Impression Homes, a top-notch company, they've got a great product. I would put my own grandmother into one of their properties, one of their new builds. So, but yeah, hopefully we can continue to help investors, and any questions you have, feel free to reach out to me as well.
Great. Thanks, Chad. And guys, if you have any questions, please reach out for a discovery call. Caitlin can put you in touch with one of our property counselors. Again, it's a no obligation call, but it can kind of get you a feel of where you're at, where you're going, and some ideas of how to grow your portfolio using our build to rent system. Also, our book, The Passive Income Playbook, how to leverage build to rent to buy back your time and have a legendary family life, best-selling book for free. You guys just write to Caitlin with your address. We will send you out a physical copy of the book for free. It's a great read. A lot of case studies of some of the people you see here on screen who have built really successful passive income through our build to rent program. We'd love to have you be a part of that. Again, that book is free. Please take advantage of it. I think you'll learn a lot about our principles, our values, and our success track record. So with that, one quick question, and we're going to run. There's a way to work with. Is there a way a builder to work with the lenders, or are you strictly associated with Southern Impression? This is a deal only for Southern Impression. Again, unfortunately, Carl, a lot of builders don't qualify for what we've been able to qualify for, Chad. And John, you're welcome. Thanks for joining us today. We really appreciate it. Guys, we'll do more of these. We want to start answering more questions for you guys. If there's anything we can do in the future, again, please reach out to your property counselors. That's what we're there for. Any pluses, minuses that you want to share with us, we're always trying to grow and improve. We'd love to be here to support you on your journey. Again, thank you for the extra time tonight. And, we'll look forward to our next webinar together. Chad, thanks again.
Thanks, guys.
Caitlin,
appreciate it.
Thanks, everyone, for joining. Take care.